Hello, you are welcome to today's live webinar. Good day, everyone. The title of today's live webinar is Post-COVID Economic Recovery, Credit Rating Imperatives for Issuers and Investors. And it is hoped that this will run from now till the next 1.5 hours. That's precisely by around 4:30, we'll be wrapping up. Across the world, COVID-19 has actually jolted the entire economic space. It's taken away lives, livelihood, and it has also disrupted activities. And so in today's webinar, DataPro Limited, in conjunction with the Association of Issuing Houses of Nigeria, AIHN, is hosting this webinar to bring about consciousness and a panacea in a way of pulling countries and even economies out of this doldrum. And so we intend today to run along this program, which of course will start immediately from now 3 p.m. Nigerian time, when we expect that the opening prayer will be said by Pastor Femi Obeweya. Thereafter, we'll be taking the national anthem, followed by the opening remarks, and then we will move on to the next one. By the way, my name is Dr. Wens Woga. I am a member of DataPro Rating Committee. I am a rating, risk management, compliance, and governance consultant based in Nigeria. And so immediately after the opening prayer, we'll be having the national anthem, followed by the opening remarks, which will be said by the CEO, MD, DataPro Limited, Mr. Abimbola Adeshoyoju. Then we will move on. That will be between 3:15 and 3:25 to the keynote address, which will be based on galvanizing the capacity of the Nigerian capital market. That will be said, handled by the CEO FMDQ. Of course, the CEO FMDQ is ably represented by Tuni Sekoni, Non-Executive Director, FMDQ Clear Limited. Immediately after the presentation, we move on to goodwill messages. We will expect to receive goodwill messages from the DG, Security and Exchange Commission, who is ably represented today by Mr. Adamu Sambo, the head of Monitoring Department. The DG of Security and Exchange Commission is Dr. Lamidi. Dr. Lamidi is, Lamido Yuguda is represented by Adamu Sambo today. Thereafter, we also expect to receive some other goodwill messages. The DGDMO, Ms. Patience Oniha, will also receive from the CEO NGS Regulation, Ms. Tinoade Awe. Thereafter, we also expect to receive goodwill message from the chairman. We will also be expecting some goodwill message from the MD, Lagos Commodities and Futures Exchange, Mrs. Akin Akeredolu Ale. Immediately after the goodwill messages, which we expect to be concluded by 3:30, we'll move on to the rating reports, because today we are going to be unveiling 2 major offerings: the rating report new look, as well as the rating guide dashboard, which we expect Dr. Wens Woga to be doing for us. That will be between 3:30 and 3:35. Immediately after that, we'll move on with the panel discussion. That will be between 3:35 and 3:15. In the panel discussion, the topic for today will be accelerating the Nigerian debt market. What's next? That panel will be chaired by the AIHN chairman, who is Mr. Ike Chioke. He will be supported by the ED, Executive Director, Nova Merchant Bank, Mrs. Funke Okoya. Also a member of that panel is the Executive Director, DataPro Limited, Mr. Oladele Adioye. We also have the Executive Director, BUA Group, Alhaji Kabiru Rabiu, represented by Mr. Jack Pekaski, who is the Chief Financial Officer and Executive Director of BUA Cement. Immediately after that, which we expect to be concluded by 4:15, we will move on with the questions and answers. That will happen between 4:15 to 4:25. Thereafter, we will then move on with the closing events. We expect, of course, the vote of thanks to be delivered by the Executive Director, DataPro Limited, Mr. Oladele Adioye. And then we'll be having the closing prayer by Mr. Buhari Aminu Issa, who is the Vice President of Compliance Institute of Nigeria. That is the way we are going to run, and that we expect to conclude by 4:25. However, in the course of the program, we intend to get some questions from the audience. There is a handle on the chat box. We expect the questions to be put in the chat box. We will be collecting it from the back end. We have some people who are looking at that. And those questions will be addressed immediately after the panel discussion. We will take those questions and provide the answers to them. And so with all this, we want to start immediately with the opening prayer by Pastor Femi Obewaya. Pastor Femi Obewaya is the pastor of Promised Land, the church, Redeemed Christian Church of God in Nigeria, Lagos, Nigeria. Pastor Femi Obewaya, please, the opening prayer for us. Thank you.
Thank you very much, Dr. Wonga. God bless you. Let me use the opportunity once again to congratulate DataPro for this epoch-making event webinar. It's my prayer that you continuously be an instrument for the viable vehicle for business and for people to have confidence in doing business in the Nigerian economic space. Shall we pray? Father, we want to thank you for your grace and your mercy over each and every one of us in particular and upon mankind in general, even as we are grappling with the challenges of the pandemic. In it, Lord, we see your mercy and we see your providence. We want to acknowledge it. Please accept our thanks in the mighty name of Jesus. Lord, even as we are about to deliberate regarding a very vital aspect of human existence, which is doing business in a conducive manner, in a safe manner. I pray, Lord Almighty, every deliberation, every paper, Lord, will go a long way even to add value, not only to the listeners, but Father, will be a seed even for the emergence of a viable economic environment in Nigeria in particular, Africa, sub-region, and the whole world. Lord, we just commit this meeting unto you in the name of the Father, and of the Son, and of the Holy Spirit. Amen. Thank you very much.
Thank you very much, Pastor Femi Obewaya. Thank you for that opening prayer. Right now, we will move on with the next item on our program, which is the national anthem. Yes. Thank you once again. You are all welcome to today's live webinar on post-COVID economic recovery, credit rating imperatives for issuers and investors, organized by DataPro Limited in conjunction with the Association of Issuing Houses of Nigeria, AIHN. Yes, at a time like this, it is very, very important that we realize that capital formation, mobilization, as well as utilization remain the ingredient of economic growth and development. And in this, the capital market, particularly the debt segment, has a major role to play. And that is where the credit rating companies come in. And so at this juncture, I would like to invite the Managing Director, Chief Executive of DataPro Limited, Mr. Abimbola Adeshoju, a man who has been described by so many as a role model, as a pace setter. He has actually revolutionized most industries he has found himself. And today, he is making history along with the Association of the Issuing Houses of Nigeria. Mr. Adeshoju, please, your welcome address.
Thank you very much, Dr. Wentz. Good afternoon, good morning, good evening, wherever you're watching and listening to us. It's my pleasure to welcome all of us, distinguished ladies and gentlemen, to this epoch-making event. I'd like to first start by saying a big thank you to our special guests that have joined us today. We really appreciate you. And we believe that you've really added color to this event. Our keynote speaker and all our panelists and those that made this possible.
Please, if you are not talking, please switch off your mic, mute yourself. There is a lot of background noise.
Okay, thank you for that. This webinar has been packaged in collaboration with the Association of Issuing Houses. So I must give full compliment to members of AIHN, and most especially the executive, for buying into this idea that we shared with them like 3 months ago to create a platform that will be used to sensitize the investing public about the potentials, opportunities, and the dynamics of the credit rating ecosystem in Nigeria. For the past 17 years, since we got our license, we have contributed our quota to the development of the capital market and the rating industry in Nigeria. But one thing that we've always found missing is the lack of awareness among the teeming Nigerians, both the informed and even the lower cadre of the society, about what exactly we do as a rating agency. A lot of times people even confuse us with the rating bureau, the credit bureau. So there's a lot of difference between the credit bureau and the rating agencies. The credit bureau deals with the rating, the credit opinion of individuals, but we give opinion on corporates, on nationals and subnationals, and also on entities and securities. So we've been nursing the idea for the past 17 years to create a platform that will be used, one, to promote the capital market and all the functionalities, and to really open it up to the Nigerian public, because I'm sure we all understand the role that the capital market plays in a competitive and a diversified economy. In developed countries, the rating agencies, even in America, the role they play sometimes have been referred to second to what government plays in the allocation of scarce resources within the economy. So we believe that it's never late in the day, even though it's taken us 17 years to realize this dream. We are very happy that finally today it has happened, and we give all glory to God and all those that have supported us and made this possible. I want to make a solemn proclamation that going forward, we want to make this webinar, since we are in the new normal now, we are going to be making sure that this is an annual event, and that every second Thursday of October of every year will be devoted by DataPro to raising the consciousness and awareness and promoting the value proposition of the capital market and what the rating agencies do in promoting liquidity within that market. Just like Dr. Wen said, the pandemic has had very debilitating effects on the economy and the individuals, but gradually we are coming out of the woods. The interventionist programs and corrective actions by all government at all levels have all gradually been winding down. So it builds on the private sector, because the government cannot do it alone. The private sector also has a critical role to play in giving direction and motivation to growing the economy and expanding the opportunities to all Nigerians. As a rating agency, our role is very critical in the capital market and by extension, the economy. And we want to make this very visible. So this webinar going forward, we continue to charge a new course in the credit rating industry in Nigeria and create the enabling environment for the needed synergy among stakeholders within the carpet, within the market. In addition to the discourse that we are going to listen to today, we also want to use this opportunity to unveil the rebrand version of our rating reports, because we've been doing a lot of work at the back end, and with the new technologies and a lot of new solutions that we have introduced, we have repackaged rating reports, and we'll also be unveiling an electronic dashboard that we've created as a rating guide to the investing public. As we all know, technology has changed the world. It has changed the workplace and has changed the environment. It has also changed the way credit rating business is done all over the world. So at DataPro, we have embraced technology, especially the new technologies such as machine learning, neural networks, genetic algorithms, big data and artificial intelligence to make the customer and the client experience unique with us. We have modernized, customized our rating processes, became more functional and results-oriented. In the months ahead, our goal is to deliver more value to all our clients all over the world using these new technologies that we have acquired to reaffirm our core values that the market has identified us with, which is speed of service, transparency of our processes, the governance, the strict governance of our procedures and our processes, and the reliability of our reports and the sustainability that have been put in place for our business. We pledge to work with all stakeholders in promoting the market and supporting new initiatives that will grow the economy and grow the capital markets. I implore all of us to please make the necessary contribution that will make the 90 minutes worthwhile for all of us and take the necessary lessons and takeaways that will make the future brighter for the capital market and Nigeria. Thank you for coming. Thank you for giving us your time. God bless you all.
Thank
Dr.
you,
Wentz.
Mr. Abimbola Adeshoyoju, for that opening remarks and welcome address joined together. At this point in time, we'll move on with the keynote address, which is centered on galvanizing the capacity of the Nigerian capital market. This keynote address will be delivered by the CEO, FMDQ, Mr. Bola Onadele Koko, who is here today, ably represented by Ms. Tuni Sekoni, Non-Executive Director of FMDQ Clear Limited. Ms. Tuni Sekoni, please go ahead with your keynote address.
Thank you. Good afternoon, distinguished ladies and gentlemen. Permit me to stand on pre-established protocols. On behalf of Mr. Bola Onodele Koko, the Chief Executive Officer, FMDQ Group, who extends his apologies for his inability to attend this event, it is my pleasure to present his keynote address titled Galvanizing the Capacity of the Nigerian Debt Capital Markets at this webinar themed Post-COVID Recovery, Credit Rating Imperatives for Issuers and Investors. It is particularly exciting to note that the focus of this webinar is on the future of the Nigerian debt capital markets. Indeed, this provides an excellent opportunity for all participants representing various stakeholder interests to engage in a focused discourse on challenges, remedies, and prospects in the Nigerian debt capital markets. The topic of my address compels me to focus on opportunities, capacity, and growth as opposed to challenges. And this I would much rather do because I am a dreamer and a fervent believer in the potential of our great country and markets, which some may call naive optimism on my part. While I will not go so far as to call myself a naive optimist, I believe true optimism comes with the power to act amidst daunting challenges. I therefore commend DataPro Limited and the Association of Issuing Houses of Nigeria for giving me the opportunity to share my views on how to galvanize the capacity of the Nigerian debt capital markets in support of the broader economy. The theme of the webinar starts with post-COVID recovery, so I will be remiss not to speak about the coronavirus disease, COVID-19 pandemic, which has dominated headlines, politics, businesses, and markets for the better part of 2 years. The pandemic led to a synchronized shutdown of large sectors of the global economy. Its impact has been so far-reaching that it will be easier to make a list of unaffected sectors than affected ones. With the massive decline in world trade, foreign direct investments, and air travel, the pandemic prompted a new wave of globalization obituaries, as much of globalization's recent gains were temporarily reversed. This ultimately resulted in a global gross domestic product contraction of 3.6% in 2020. Given the outsized global monetary and fiscal policy responses, the Great Lockdown recession was short-lived as global economic activity has gained momentum in line with expectations. The rebound, however, remains below pre-pandemic projections. Nigeria, of course, was not spared from the worst effects of the pandemic either. The imposition of measures like those of other economies, such as lockdown, amidst health concerns, significantly impacted the performance of the largely informal economy. Beyond this direct impact on our economy, the sharp reduction in global economic activity, consequent decline in the demand for crude oil, and the supply glut pushed crude oil prices below production cost levels, increased fiscal pressures, which led to the downward revision of the 2020 budget, saw capital imported into Nigeria as at Q2 2020 declined by circa 78% year on year, and ultimately led to a recession as the GDP contracted by 6.1% and 3.6% in the second and third quarters of 2020, respectively. This recession, however, could also be viewed as short-lived, with the Nigerian economy returning to very modest growth in Q4 2020. The debt capital markets play a key role in the ongoing economic rebound in most parts of the world, including Nigeria. Central banks across the world reportedly cut interest rates 207 times in 2020 amidst the pandemic. And in the face of low interest rates, national governments accessed funding through a significant increase of 36% in sovereign debt issuances in 2020 relative to 2021. Countries around the world have used this infusion of funds to provide an immediate stimulus to confront the economic disruptions caused by the pandemic. Also, businesses accessed capital markets and issued substantial amounts of debt securities, resulting in a significant increase of 66% in corporate bond issuances in 2020 relative to 2019. Beyond its role in the ongoing recovery, at FMDQ Group, we have always recognized the debt capital markets. We've always recognized that debt capital markets have the capacity to transform Nigeria. From building infrastructure, driving agriculture, inspiring industrialization, to providing huge employment opportunities. This recognition underlines what we do at FMDQ Group and is aptly reflected in our mission to empower markets for economic progress towards delivering prosperity. To achieve the stream of economic transformation through the capital markets, I'll be speaking to 4 themes that will serve as tailwinds for the growth of the debt capital markets. First being market depth, second, product and investor diversification, third, enabling environment, and fourth, operational efficiency. Firstly, market depth. To appreciate the massive growth required for the Nigerian debt capital markets to transcend status quo to global competitiveness, let me share some statistics on the Nigerian markets in comparison to other jurisdictions. In the nation today, the debt capital markets are disproportionately dominated by the federal government of Nigeria, which remains the largest issuer. As at October 13, 2021, for instance, the total size of Nigeria's debt stood at 37.5 trillion naira. That's about $90.8 billion, of which non-sovereign debt accounted for just 18%. That's about 6.7 trillion naira. This translates to a very low non-sovereign debt to GDP ratio of about 3.78% when compared to other developing economies like South Africa and India, whose ratios stand at 22.15% and 20.99% respectively. This data presents an opportunity for the exploitation of the untapped potential of the non-sovereign debt capital markets to meet long-term finance needs in different aspects of the Nigerian economy. Corporates and other non-sovereign entities could realistically raise an additional 29 trillion naira, that's about $70 billion, from the debt capital markets over the next few years, representing over a 300% increase in current activity levels and a shot at 16.2% of GDP to take non-sovereign debt to GDP ratio to just 20%. This figure seems like an unachievable leap from where we are today, but a closer look into the opportunities for deployment will immediately reveal its inadequacy. For instance, infrastructure in Nigeria is significantly behind other emerging market peers, with about $3 trillion, that's about 1.24 quadrillion naira, needed over the next 30 years to close the gap. The establishment of Infracro PLC, which is expected to be capitalized with 15 trillion naira, is a step in the right direction. With the many budgetary and financing challenges facing the government, however, Moody's posits that significant financing from the private sector and multilaterals is needed to address the deficits. Most recent figures from the Nigeria Mortgage Refinance Company puts Nigeria's housing gap in the region of 23 million units. Working closely with key stakeholders, FMDQ Group developed the Nigerian Home Ownership and Mortgage Expansion Strategy, HOMES, which is designed to create jobs and prosperity for Nigerians through mortgages refinanced by mortgage-backed securities, MBSs. If successfully implemented, HOMES could add about 40 trillion naira in MBSs to the Nigerian debt capital markets. That's using a 10 million naira mortgage for 4 million Nigerians. In addition to these, I see further opportunity to deepen debt capital markets in the development finance efforts of the Central Bank of Nigeria. Today, the CBN provides affordable lending facilities in support of the growth of critical sectors of the economy via several intervention funds and schemes. The CBN's laudable objective can be achieved via the introduction of an interest rebate framework. Under the proposed framework, qualified corporates that have the capacity to access the debt capital markets would raise capital at market rates and enjoy rebates on coupon repayments from the CBN to reduce interest costs to the desired single-digit level. This approach not only achieves the economic development agenda of the CBN, but also stimulates activity and growth in Nigerian debt capital markets. I could go on and on highlighting the many capital development opportunities that could galvanize growth in debt capital markets, but I must move on to the other themes. Products and investor diversification. Creating a multiplicity of financing and risk hedging products suitable for various categories of issuers and investors will provide multiple financing options for the issuers to raise capital and attract different and potentially new classes of investors to their capital markets. The ever-growing importance of sustainable finance in the global markets provides an opportunity for us to further diversify product offerings in Nigerian debt capital markets. A growing cluster of investors, from niche asset managers to the largest in the world, are increasingly applying an ESG, that's environmental, social, and governance lens, to capital allocation. As investors showing growing interest in committing capital to solve environmental challenges, blue bonds, a class of sustainable bonds, have emerged as one of the latest financing instruments to help protect the world's water bodies and the economies that rely on their health. Seeing as to provide access to capital that would have otherwise not been available, these bonds can be used to address some of the environmental challenges in Nigeria. It is against this backdrop that FMDQ Group has partnered with global and local institutions to promote sustainable finance in the Nigerian debt capital markets and encourage investments in projects targeted at restoring environmental balance, amongst others. To the third theme, developing an enabling environment. Supportive government policies as well as sound legal and regulatory frameworks that will inspire confidence are critical to the development of the Nigerian debt capital markets. Thus, stakeholders must always explore measures that will promote the enactment of market-friendly policies. While we're not there yet, when it comes to creating the optimum conditions for our markets to thrive, as they should, there have indeed been several market-friendly reforms in Nigerian capital markets. Worthy of note are two crucial events. The first being the release of 2 sets of rules by the Securities and Exchange Commission, which will serve as catalyst for product diversification via the development of derivatives products in Nigeria and encourage the much desired counterparty agnostic trading, which will boost trading liquidity and improve capital efficiency in Nigerian debt capital markets. The rules on regulation of derivatives trading, which provide the necessary regulatory framework to support the broader application of derivatives beyond the FX market in Nigeria, and the rules on central counterparty, CCP, which sets the regulatory environment for the establishment of the CCP, which is a critical market infrastructure for the aggregation and management of counterparty risk in derivatives market and beyond. And the second being the repeal and the reenactment of the Companies and Allied Matters Act, CAMA, 1990 as CAMA 2020. Prior to the enactment of CAMA 2020, netting provisions in transaction documents and agreements were not protected and enforceable in liquidation. But with the inclusion of netting and bankruptcy remoteness provisions in CAMA 2020, legal deficiencies have been addressed, making the Nigerian financial system more attractive. This is expected to boost confidence in Nigerian financial markets, galvanize foreign capital inflow, and increase participation in and demand for certain financial products and services like securities lending and collateral management. And the final theme, operational efficiency, speaks to adeptness and transparency of operations across the capital markets value chain. Financial market infrastructures play a major role in ensuring operational efficiency in the capital markets as they serve as coordinators, leveraging people, processes, and technology. Beyond supporting and advocating for the other three themes, an institution like FMDQ Group is instrumental in delivering operational efficiency to the capital markets. Today, world financial markets are increasingly moving towards integration, connecting erstwhile fragmented segments and processes across the full value chain of the securities market. And Nigeria, of course, is not left behind with noteworthy events such as the straight-through processing of straight processing of settlement of fixed income trades achieved by the CBN, the Financial Market Dealers Association, and FMDQ Group, the imminent introduction of central counterparty clearing, and the availability of a choice of central securities depositories complementing the value chain of pertinent infrastructure in Nigerian capital markets. These developments have presented the markets with an efficient, innovative, and integrated FMI for seamless execution, clearing, and settlement of financial markets transactions. At FMDQ Group, we consider ourselves a strategic player in the debt capital markets ecosystem, with no choice but to participate actively in advocating for catalytic change. We're committed to galvanizing the capacity of Nigerian debt capital markets through the themes discussed. As such, beyond being a market organizer for the debt capital markets, ensuring transparency, liquidity, depth, and diversity, we take our role as financial markets advocates for Nigeria seriously, promoting it as a destination for capital markets, for capital investments, catalyst for infrastructure capital, especially driving prosperity for Nigerians through mortgages and sustainable financing, and being advisor to government and regulators on their roles in making the vision a reality. We firmly drive these in keeping with our mission to collaborate, to empower markets for economic progress towards delivering prosperity. I end my address on this note of collaboration, challenging you all within your individual areas of expertise to be encouraged by the progress we have made in the debt capital markets value chain, and not relent when it comes to thinking of and jointly implementing ways to keep us moving forward towards global competitiveness, operational excellence, liquidity, and diversity in the Nigerian debt capital markets. Thank you.
Thank you very much, Ms. Tumi Sekoni, Non-Executive Director of FMDQ Clear Limited, ably representing Mr. Bola Onadele Koko, the CEO FMDQ. Once again, thank you very much for giving us this expose, and I have taken away, and I do hope our numerous guests across the world have also noted the blue bond, which is addressing social and environmental risks, of course, bringing about sustainability in our various environments. Once again, messages. We are expecting goodwill messages from DG SEC, Dr. Lamido Yuguda, ably represented by Mr. Adamu Sambo, the head of monitoring department SEC. We'll also be expecting goodwill messages from DG DMO Debt Management Office, Ms. Patience Onia. We'll also be expecting from CEO NGS Regulation, Mr. Chinuade Awe. We'll also be expecting goodwill message from the chairman, Nova Merchant Bank, Mr. Philip Odoza, as well as the MD, Lagos Commodities and Futures Exchange, LCFE, Mr. Akin Akeredolu Ale. Let's begin with the DG SEC, ably represented by Mr. Adamu Sambo. 1 minute to 2. We are allocating for each. Please go ahead, Mr. Adamu Sambo.
Good afternoon, everyone. It's my pleasure to make this goodwill message on behalf of the Director General of the Securities and Exchange Commission. First and foremost, I want to congratulate DataPro for this novel and very important webinar. I believe that this webinar will go a long way in educating a lot of people about the importance of credit rating as an instrument of providing disclosure with respect to fixed income securities and as well as the issuers of the securities. As you may be aware, the Securities and Exchange Commission, as the apex regulator of the capital market, its primary responsibility and objective is investor protection. And every rule is investor protection driven. The same thing, therefore, goes for the rule on rating agencies. The essence of coming up with that rule is to ensure that there is an added value disclosure with respect to fixed income securities and other form of securities that are brought to the capital market for subscription by investors. As you are aware, as you know, that in every offer, apart from in the offer document, you find out that apart from the audited account, we have the the reporting accountant report, and in addition to that, the report by the credit rating agencies is a very important one because it adds value in terms of giving added disclosure so that investors will make a more informed decision when they are taking decision on their own investment. Granted that the opinion of credit rating agencies are not meant to become an investment advisory service, but still their importance cannot be overemphasized. In view of the fact that globally, a lot of people, instead of reading hundreds of pages of offer documents, they can get an abridged report that contains the precise and most materially important information they require to enable them to carry out an informed decision on their own investment. Even though over the past years, a lot of people have expressed their reservation about the opinion by credit rating agencies, particularly the solicitor rating, where they earn consideration for the opinion they give. And yet, in some cases, there are a lot of caveats that these opinions are not meant as investment, advisory service. They are just opinions that the investors can use in order to make decisions, in addition to other, parameters that they can use. That credit rating agency opinions is not an only opinion that can be used by investors to take decisions. Notwithstanding that, today, a lot of investment decisions revolve around the opinion of the credit rating agencies. And therefore, the DG is saying that credit rating agencies must ensure that whatever opinion that they are going to give, they must ensure that it is investor driven. We are quite aware that credit rating agencies were employed by issuers, and therefore the issue of conflict of interest in terms of giving that opinion may come in. But if the credit rating agencies, notwithstanding the fact that they are being paid by the issuers, they should realize that their emphasis should be driven toward the investor by giving the investor the right information so that there is no falsification of information in order to appease those who employ them to do that. So what we are saying essentially is that at the apex regulator of the capital market, we are expecting that every opinion given by the credit rating agencies should be such that it is going to improve the confidence of investors in the market. Everybody knows that the capital market is the treasure for our economy, even though it's not taking advantage of much. But if the capital market is given the right attention, the economy of the country will definitely see a quantum leap in terms of its own development. To do that, in the course of fixed income, just as mentioned by FMDQ, that the fixed income market is the one that will drive the economy in terms of infrastructural development. And most of these fixed income instruments are rated. And if the rating reflects the true value, the material value of those infrastructure securities, it will a great deal help in giving a quantum leap in the development of the economy. So I believe that rating agencies have a lot of responsibility on their head, and they have to ensure that whatever information, whatever indices that they are giving to the investing public to enable them to take an informed decision in their own investment, it should be such that it contains the right information. It should be driven in such a manner that no information is given in order to appease the issuing companies or organization or government, but that it should be that to make sure that the capital market, and particularly the debt capital market, is improved upon through the activities of the rating agencies. Today, if you look at most of the documents, offer documents, they are in hundreds of pages. But because of the technical knowledge the rating agencies have, they can convert these hundreds of pages into maximally maybe 5 pages, because they will inform the investor that of all these pages, these are the material information that could help you to take a better decision. So let that information be that it will assist the investor to take a good decision to improve the market and improve the confidence of the market. As we are aware that every investor in the capital market is relying on confidence. It is not a market where you, fiscal good market where when you give your money, you take a fiscal good. Here in the capital market, we are buying confidence. And if you are buying confidence, disclosure, right disclosure is very important. And one of the critical disclosures is the disclosure by the rating agencies. And therefore, the message from the direction of the commission is that rating agencies should look at themselves as a critical and pivotal, organizations that will help in improving the confidence of investors in the capital market, and therefore, improving the depth of the capital market and improving the investment of, general investment in, in the capital market, and therefore drive, drive the depth of the market and make the market to be the household name. So I think on the basis of this, I want to thank DataPro, and I wish them, truthful deliberation. Thank you very much.
Thank you, Adamu, for ably representing the DG, Securities and Exchange Commission. You have actually pointed out and spoken like a regulator. Thank you very much. So may we now call on the CEO, NGS Regulation, Ms. Tinuade Awe, to please give her goodwill message.
Good afternoon, ladies and gentlemen. I would like to stand on existing protocols. It gives me great pleasure to be here on behalf of NGX Regulation and to wish DataPro and the Association of Issuing Houses of Nigeria well as you go on this, along with this event. I was very pleased to note during Mr. Adeshemoju's introductory address what he said about the fact that this event is going to be a yearly event. I think we need to increase the level of conversations at a very high level, high quality level of conversations with various things that affect the markets. As a private sector regulator in Nigeria, we uphold the principles of regulation as espoused by IOSCO. And those principles are around the protection of investors, the creation of fair, orderly, and transparent markets, and the avoidance of or reduction, if I may, of systemic risk. And I think that the work that rating agencies do is very, very critical with respect to these three objectives of securities regulation. Those disclosures, the information contained in rating agency reports, as well as what is espoused by a particular rating, the facts behind it are very, very critical and are really among the things that make markets work. And we're looking forward to working with DataPro, the AIHN, and other institutions in the market to bring this market to the best standards that it can be, and to continue the good work that has been started. So we wish you well. Thank you very much.
Thank you very much, Mrs. Tinuade Awe, the CEO, NGS Regulation. Thank you for that wonderful goodwill message. At this juncture, I will now invite the chairman, Nova Merchant Bank, Mr. Philip Odoza, to please give his goodwill message. Mr. Odoza, please.
Thank you so much. Distinguished ladies and gentlemen, I want to stand on existing protocols. First, I want to commend DataPro for this wonderful initiative. This couldn't have come at a better time. It's coming at a time when the entire world, including Nigeria, is going through the pandemic, which has altered the status quo. You discover that businesses have been significantly altered in terms of the values, in terms of the risks, and indeed the perception. Therefore, it becomes imperative to reassess the risk profile of entities, instruments, securities, and others. To this effect, the pioneer initiative by DataPro is very commendable and invaluable. What we observe is that businesses and sovereigns will be rebuilding their financials and balance sheets driven by capital raise. And in addition to that, businesses also will be implementing the Basel III, which is going to require some restructure of the capital, both equity and debt. And to this extent, rating becomes very, very key, credit rating of these entities. And this is where of DataPro comes in. And DataPro is a leading name in this particular sector. You notice that a bank like Nova was able to raise a bond, Tier 2 capital, last year at the middle of the pandemic. And this was around July, August last year. And the instrument was rated by DataPro. And I must say that the instrument was oversubscribed to the tune of 300% at the middle of the pandemic. This is the power of a rating agency. So I want to commend DataPro significantly, and also making this because I had at the beginning saying that this is going to be an annual event. I am very, very, very excited by that because Nigeria is overdue for this type of initiative. And as such, again, I want to say thank you to DataPro for assembling this caliber of people and institutions for this webinar. I really look forward to future ones. Meanwhile, I want to wish everyone a very fruitful deliberation. Thank you so much.
Thank you very much, Chairman, Nova Merchant Bank, Mr. Philip Odoza, for this exciting and inspirational message. Thank you very much. We now invite the last but not the least, the MD, Lagos Commodities and Futures Exchange, Mr. Akin Akeredolu Ale.
Good afternoon, everyone. I would like to stand on the existing protocol of those that have come earlier and recognize also all the dignitaries and stakeholders and the operators of the capital markets that are assembled today, especially my DG SEC, Alhaji Lamido Ibira, ably represented by Alhaji Sambo. My greetings to the DG. It is no doubt that the economic condition of the country declined drastically due to the intrusion of the pandemic. And that's the COVID-19 pandemic. And the pandemic also affected the Nigeria's economy. Not only Nigeria's economy, but the world at large. No one foresaw it, and no one made preparation for its effects. But recent developments in the local economy have shown that all hands are on deck to ensure that a quick recovery from the effect of COVID-19 and to grow our economy back through an efficient capital market, which there has been a deliberate focus on our capital markets, which includes the equities market, our fixed income markets, and now the commodities space. Because despite the pandemic, one of the few sectors that still thrived very well in the Nigerian economy is the commodities ecosystem. The commodities ecosystem contributes almost about 65% to our GDP, and it means that effectively we must still have a lot of focus on the commodities ecosystem. Because if the commodity ecosystem is not thriving, the manufacturing sector will thrive. And if the manufacturing sector does not thrive, the service sector, the banks and insurance companies will not thrive very well. So I'm very happy that we're here today. The capital market is actually the convergence point for issuers and investors. But to ensure a mutual beneficial relationship between both parties, some major elements of the relationship must be addressed, which is the issue of the rating, the confidence in the market for people to be able to participate. I'm very happy about what I just said earlier about Nova, and we did 300% subscription for their placement, which showed that the rating agency played a key role in alluring people's fares. But when creating a new ecosystem like we are doing, people always look at the risk management sectors, the management processes to determine what success will be coming out of a particular ecosystem. And to do this, we will require to ensure efficient allocation of resources for corporates to leverage on the capital markets. We need a rating system. And we're very happy that the rating system is coming up at this time for us to be able to focus on the subnationals, the nationals, and also for people that want to access the global demand chain, whereby the global community want to see a rating agency looking at you, your products, your instruments, and the issuers, for them to be able to give a position on this. Credit rating agency is essential to provide confidence in the capital markets, and the commodities exchange ecosystem also is not excluded from this. We're not excluded at all. Credit rating is important. The commodity ecosystem market feels one of the very important risk management requirements. An effective credit rating structure in the commodities ecosystem is very important to us because it ensures that there's confidence in the sector. Ensuring that participants like the pension fund administrators, the foreign institutions and local investors can consider the commodities ecosystem as a viable place to invest in and to be able to participate in. To be able to have active, effective participants in the ecosystem, we need a properly structured, healthy rating ecosystem. And I'm very happy that SEC has spoken about the rating ecosystem where the rating agencies. It'd be nice to have 1, 2, 3, or 4 more rating agencies so that there'll be a robust position from the angle of data collation, information dissemination, data analytics, and all that for people to make informed decisions. It will help nudge our current capital market in another level. I will also nudge people that are sitting on the fence to be able to participate in all the greenfields in the ecosystem and to be able to drive particularly the intra-Africa trade the Pan-African trade and the global trade. The global trade, the internationals want to see what is the rating like, and for Africa to participate very well, and even in West Africa. This will support the Africa Free Trade Charter also. As a commodities exchange that enables stakeholders raise capital through different financial instruments, having an updated rating report is a major requirement for us all the time. So at Lagos Commodity and Futures Exchange, we are very, very happy that DataPro is participating in this ecosystem. And we're also very, very proud to say that they are one of our partners in the commodities ecosystem. We want to acknowledge the launch of the new credit report template by DataPro, which will happen later today. The need for a universal rating guide dashboard that is available to the entire capital market will be a welcome development. We are happy to be here at this webinar, and it is a welcome development not only for the capital market, but for the commodities ecosystem. Well, I would like to thank DataPro for bringing relevant and seasoned stakeholders together to discuss this very, very important conversation. Without the rating agencies, the instruments that want to participate in global would be limping, and we're happy that this will come up, and it's going to be on an annual basis. We want to congratulate DataPro, and we look forward to participating in this program next year too. Thank you very much, DataPro, from Lagos Commodity and Futures Exchange. Thank you.
Thank you very much, Mr. Akim Akeredolu-Ale, for that wonderful goodwill message. Once again, I want to remind everyone, the distinguished guests, that we still would appreciate the questions to be popping either in the Q&A or the chat box. We will take them immediately after the panel discussion. And I will also want to crave your indulgence for us to tinker a little bit with the program by bringing forward the panel discussion while we'll be unveiling the offerings immediately after the panel discussions. So right about now, we are preparing to bring the discussions for the panel discussion. The panel discussion will be chaired by Ike Chioke, who will be the moderator. He is the chairman of Association of Issuing Houses of Nigeria, as well as the managing director, chief executive, Afri Invest. He has over 28 years of investment banking experience. He is also the chairman. He was the chairman of the FSS 2020 Capital Markets Committee of the Central Bank of Nigeria. He is also the chairman of Enugu State Technical Committee on Privatization and Commercialization, as well as the chairman of the board of Fitness Factory Limited and a member of the board of Savvy Power Company Limited. He will be supported in the panel discussion by Mrs. Funke Okoya. Mrs. Funke Okoya is the executive director, investment bank of Nova Merchant Bank. She has over 22 years of experience covering corporate, investment banking, commercial banking, credit and risk management, operations, customer services, technology, project management, branding, strategy, and communications. Before joining Nova Merchant Bank, Mrs. Funke Okoya had stints with some other banks, including Access Bank and United Bank for Africa, UBA, where she also held various management positions. Also, among the panel discussion will also be Mr. Dele Adeoye. Mr. Oladele Adeoye is the executive director of DataPro Limited. He is also a financial analyst and very vast in capital market operations. He has been a member of DataPro credit rating team since 2004 and has headed the team for over 10 years. He has participated in and completed corporate bond, commercial papers fund, state bond, securities, and some other infrastructural ratings. Mr. Dele Adeoye has over 20 years working experience covering banking, manufacturing, and consulting. Next is Alhaji Kabiru Rabiu, who is the Group Executive Director of BUA Group. As a businessman, he has injected fresh ideas and innovations into the running of BUA Group with interest in mining, agriculture, manufacturing, and a lot more. In his quest to expand the group's frontiers, Alhaji Kabiru ventured into the financial technology market in 2019 with the launch of a payment app called Holaport. As a recognition of his achievements, he was honored as one of the CHOSEL 100 African laureates in 2017 by the prestigious Institute CHOSEL Paris. He is, however, unavoidably absent today, and from his goodness of mind, he has sent a worthy representative, Mr. Jack Pikaski. Mr. Jack Pikaski is the Chief Financial Officer, Executive Director for BUA Cement PLC, and a seasoned finance professional with over 26 years experience. Prior to joining BUA Cement, he held several C-suite finance roles across Europe and Africa in FMCG, cement, trading, and mining. Over the course of his career, Mr. Jack has had significant achievements in setting up or reorganizing finance departments, financing loans, bond, rights issues, debt restructuring and refinancing, revenue and cost optimization programs, various expansion and projects including enterprise resource planning implementations and controlling. He is known as a charismatic, results-driven and dynamic leader with a strong business acumen. I will now hand over to Mr. Ike Chioke as moderator to chair the panel discussion. Mr. Chioke, please.
Good afternoon, everyone. Can you hear me?
Yes.
Okay. I'm afraid I'm not able to see the other panelists. Is it possible to change the mode of the view?
Okay.
So that I can see the parties at the same time as I'm speaking.
Okay, thank you. It will be done right away.
Okay. Well, good afternoon, everyone. It's great to be here. My name is Ike Chioke. I'm the president of the Association of Asian Houses of Nigeria, and we are delighted to be partnering with DataPro this afternoon to talk about this very, very important topic. What's happening in a post-COVID world as far as credit rating agencies are concerned, and how corporates can seek to take advantage of the opportunities in the market. I just want to take you back again to the issues at hand in terms of the objectives of this seminar, to bring to fore the importance of credit rating agencies in economic recovery efforts in a new normal, to enlighten stakeholders on the capital markets about new and emerging trends, patterns, risks, and opportunities within the credit industry, to espouse the potential of the credit rating agencies, particularly DataPro, in developing the capacities of MSMEs in fulfilling their role in economic development. And last but not the least, to develop the market for solicited and unsolicited ratings in Nigeria. With me on the panel, they've all been introduced already. Mrs. Funke Okoya from Nova Merchant Bank, Mr. Jacques Pikaski from BUA Group, Mr. Oladele Adeoye, and Mr. Vince Woga. So without further ado, I'd like to invite my panelists to sort of make an opening remark on the subject at hand. And I would just like to allow each person, say, 3 minutes to make an opening remark before we then go into the Q&A part of the seminar. Thank you very much. Funke, would you start, please?
Thank you so much. I take it as ladies first. Thank you, everyone, for having us here today to talk about this very important topic. The truth is that a lot has happened in the Nigerian market over the past couple of years. And laudable enough also is the role of the regulator, Securities Exchange Commission on this, to create more awareness about the importance of the debt capital market. And the interesting thing again is if you look at the statistics, which we'll be talking about along the course of our discussion, you see that there's been so much traction in terms of volume of transactions that have been consummated in that space. However, we're still very far from where we ought to be. So we're hopeful that in the next couple of years, we're going to see a lot of more improvements in that direction. And I'd like to stop at this point. Thank you.
Thank you. Oladele, why don't you go ahead?
All right, thank you for giving me the opportunity to be able to speak to the topic at hand. I just want to note that Nigeria, in terms of GDP, has been experiencing growth, even though this growth has been, related to the base effect of what we had last year. It is expected that much traction could be gained if only attention is paid to this market. And we expect that every player and critical stakeholder should be able to play their role right, knowing what to do part-time, especially the medium and small scale enterprise should be encouraged, and so that we can have a market with a lot of traction in the medium to long term. Thank you.
Okay. Mr. Jacques Pieskaski, I hope I pronounced your name right.
Yes, good afternoon, Ike. Good afternoon, ladies and gentlemen. Real pleasure to be here today with you. Recently, we had a great experience with our bond. It was the largest issue in the Nigerian market. So it's still very fresh in our mind. And I take this opportunity to thank DataPro and one of his competitors as well for giving us the rating. It was a very good exercise. As one said before, people always think, that we should be able to get better, but we got an excellent rate, and I'm sure we will make better next time. Having said that, the importance of rating agencies is really huge, and it helps us, to get first the issues fully subscribed. It helps us to get a lower interest rate as well, but also it gives us some good insights where, sometimes in terms of processes or other areas where we had, good insight from the DataPro. The debt market as well, I think we touch base on it, is very important for companies like ours that are heavily investing and expanding. So obviously, there is always a mix of debt and equity. But in general, of course, everyone will go on the debt market for this. So we also want to be sure that we understand it very well, and that we do our projections in the most accurate way, so that we can approach the debt market when it's needed and when the conditions are most optimal for us. Thank you very much, and looking forward to the rest of the discussion.
Thank you. I'd like to go back to Funke. When you look at what's happening in debt market now, and seeing that it's gaining traction in recent times, do you think this is a favorable time for issuers and investors?
Absolutely, and I'll tell you why I feel so. Because there are a lot of factors that have helped to stimulate the appetite of the issuers, which has also ushered in an historic low interest rate regime, which also triggered notable appetite to raise long-term capital at very competitive rates, suitable for the investors, for the business expansion of a lot of clients and for other purposes. In addition to that, different capital market operators also, as well as the regulator, the SEC, has also played a very active role in advancing creating a lot of awareness and education and also the market development in that area, thus also helping to improve the issuer's understanding of the opportunities in the debt capital market and also the prospects for raising finance beyond the conventional, plain vanilla raising finance from banks. For example, at Nova Merchant Bank, we continue to offer our clients various alternative financing solutions, including opportunities to also tap into the money and debt capital markets through issuance of instruments like CPs, bonds. We've done a couple. And in addition to that, our array of banking, corporate banking services has come to assist. Beyond that, like I said earlier, market education in this area is extremely important. And that is why I would like to say again that events like this help to bring different actors and also stakeholders together to share knowledge and exchange perspectives on important issues relevant to the growth of the capital market and the broader economy at large. Thank you.
Thank you. Thank you. That's very useful. As an issuer, and this is for Jacques, if you had to access the market again, what areas of improvement would you recommend from an issuer's perspective?
Well, for us, actually, we had a very good experience. I think the most important number one is to learn from the past experience. That's quite obvious. But from what we experienced, where we had some challenges was in the readiness of the information and documentation. So when you go through such an exercise, there are a lot of various requirements and requests which demand sometimes some different type of documentation. So of course, once you've gone through this, you know them and it's easier for next time. But that was sometimes quite demanding in terms of time. And as well, I think the second thing is the time frame when you go for a debt exercise, the time frame is quite tight. So I think it's very important that everyone needs really to comply strictly with the numerous deadlines, because it's a chain of elements. And if you are late in one, of course, it stops the rest. So I think these two things are really, they are key.
Okay. And back to you, Oladele. Seeing that you're in the engine room as a rating agent yourself, SMEs are considered the engine of growth in any economy. The fear has always been the possibility that SMEs cannot make investment grade. What do you think? What are the chances for SMEs to come in and get a rating from an entity like DataPro and get an investment grade rating?
All right, thank you for that. The first thing I need to mention here is that when we are looking at rating an entity, first of all, size is of little concern. I know sometimes size could be one of the ways to gauge the level of resilience and the ability to absorb shock whenever one arises. However, there are other factors, not just the size of the organization. There are other factors that a rating agency would consider before assigning a rating. And if you ask me, and based on what Mr. Jackie has mentioned earlier in his contribution, documentation and disclosure is a big issue. No rating agency wants to give opinion without having full disclosure and very robust information about your operation. So rather than being concerned about whether they are going to get good rating or not, the first concern is that they should pay attention to their processes and procedure. the documentation, the transparency, and so on. Because as a rating agency, we are going to be paying attention to governance. We are going to be paying attention to that disclosure. We are going to be paying attention to risk management procedure that you have put in place. We want to also see you, if you are a niche player in a particular industry, and how much of importance you have. In terms of debt issuance, we also want to see what credit enhancement you have built into the structure. Even though you could be a small size organization, there are other big organizations that are putting their balance sheets behind you. All of that will be given consideration, not necessarily your size. And I think it is important that SME get that message very clearly. Thank you.
Thank you. Although I might opine that it's a challenge for an SME which is still struggling to survive, to then have in place all the documentation and all the governance procedures that you would expect of a company that will get a good rating. But that's something that we may be like looking for a diamond in the rough. Back to you, Funke. As an investment banker, what improvements in terms of supervision and regulation do you consider is appropriate to further boost the debt markets?
Okay, thank you for that question. The issue of supervision and regulation, you really cannot overemphasize it. It's actually extremely important because globally and indeed, the stance of the new leadership of the Securities and Exchange Commission is the adoption of regulation as a service philosophy. This philosophy in itself helps to improve compliance and also helps to ensure that rules and regulations are well aligned with new market realities because it fosters strong working relationship between the regulator and the market operators without blurring the relevant lines of supervision, which is important to prevent abuse. I'm excited that SEC is taking this approach, and I would encourage interested stakeholders engagements, just as it is important for operators to also warm up to the opportunity that the leadership of SEC provides in collaborating to deepen capital markets penetration without abusing this golden opportunity. Interestingly, it is also sacrosanct that engagement of the regulator should be based on issues that would benefit the broader market at large, rather than pursuit of individual firm or groups' interests, such as may end up in abuse of excess and possibly undermine the broader big picture of growing our markets to the desired level. Now, the statistics on market debts are really concerning, even as it also shows the prospect for growth, like I mentioned earlier, but we must ensure that the group interests pursue holistic interest of the market, as doing that would indirectly benefit each player, including the proponents of the initiatives. Thank you.
Thank you. Very interesting. Back to you, Jacques. Your firm, we all know, recently accessed the market, and your issue was rated a AA by DataPro and was oversubscribed. What do you consider to be the critical success factors, and what are you doing to ensure your rating is maintained and not cut down in the future?
Thank you for the question. Well, in terms of critical success factors, obviously the first one is the financial performance of the company, including a good balance sheet structure, debt equity, working capital. And then on the operational side, of course, is to demonstrate the operational efficiency. I think very important as well is the board and management quality, experience, and reputation. And very importantly as well, the risk management. And I think Oladele also mentioned it before, the corporate governance adherence. I mean, this is an area that the rating agencies are very much looking into And as a PLC particularly, you have to comply with all these regulations. Now, in the future, to ensure that we don't get downgraded, well, obviously, in general, everyone is aiming at the other way to be upgraded. But for that, obviously, to at least to avoid to be downgraded, I think one has to continue to improve, continue the expansion, the growth, continue the operational and management excellence. That's very important, to be surrounded by good managers. And then, of course, you have all the other parameters such as cost optimization, anything that you can do to help further improve the bottom line and the cash. Thank you.
Thank you. Oladele, back to you. As you know, many organizations don't have the privilege of BOA Group to report fantastic performance. So, and I think that when you look at a company of the size and scale of BOA, and you see the size of the balance sheet, then the rest of all the governance issues and disclosure become more like, I would say, icing on the cake, but the main cake is already there. So when companies are not able to report fantastic results, particularly in a year like 2020 when we had COVID, to what extent will this historical performance affect their rating? And how do you actually look at them if they're in a turnaround mode coming out of a depressed year like last year? And even part of this year, yeah.
Okay, thank you for that. Let me first of all state very clearly, as a rating agency, we look at both the quantitative and qualitative. And that is why, as a rating agency, we don't just look at the numbers for 1 year, even though we are not auditors, but we want to look at your historical number to be able to gauge how you will fare in future. So in essence, rating exercise is futuristic, using the historical numbers as guide into the future. So to be able to have that trend, to be able to look at that trend, we usually ask for minimum of 3 years or maximum of 5 years. And we want to see whether the year 2020, like we have recently, could be treated in isolation. And once that is given a consideration, we also want to look at how were you able to quickly adapt in a year like year 2020, the COVID year, and be able to, surmount the challenges that it presents. So a lot of time we're also looking at the strategy put in place by the management. Even though the profitability could go down, the capital could go down a little bit as a result of the provisioning from a bad profit reported in a particular year. But at the same time, we want to see what is the management doing differently to ensure that this is not reoccurring, or to boost the strengths, the financial capacity of that organization. So a lot of time we look at the diversity of your earning. We look at your earning profile, how well diversified is it, your cash flow, your sources of cash flow, where are they coming from, and all of that. Those are qualitative issues rather than the absolute concrete figures that are coming from that sources in the COVID year. And that informs us of how well you can source, you can survive in the immediate future, knowing fully well again that the rating period carries a maximum of 12 months. So we want to be able to peep into the future based on what you have currently. Thank you.
Let me let me ask a quick follow-on question like that. Is it recommended that companies should just have a rating and have it so that they can access the market on an opportunistic basis? Or is it that they should just do the rating because they want to go to the market?
Thank you very much for that question. And that is the experience in Nigeria presently. A lot of organizations assessing rating now are doing it based on a need basis. One, that means they want to assess the market. And two, because it is statutorily required. But what we are canvassing is that you don't have to wait for those two to happen, because that is not the only advantage you get from having your rating report. And I'm happy Mr. Jackie mentioning that based on the rating that they were able to get, it opens their eyes into some process and all of that. So your rating report is like your medical report. Permit me to use that. It's like your medical report telling you that although to yourself and to people out there you look healthy, but these are little aspects of yourself, of your process, of your procedure that you still need to look after to be able to maintain your good posture. And so it is important that our operator recognize that. Thank you.
Okay. I have the last set of questions for the panelists before we then open the floor to take any questions from the audience. And Funke, if you think about, this is for you now, looking at FDI flows in the second quarter of 2021, we saw about $875 million US. That's the least quarterly flow since 2016. And so that's sort of underwhelming, and we must admit. What, in your opinion, are essential to making Nigeria a destination of choice, particularly for capital flows and the debt market?
The issue of FDI, foreign direct investment, is actually a very important one. And from our perspective, it typically requires a holistic, deliberate policy drive that will not only enhance the ease of doing business in Nigeria, but will also present the company as the best destination for capital flows. As you already know, clearly in today's global markets and highly competitive environment, capital flows generally to where it is perceived to have the chance of getting the best and the highest returns. Now, bringing it back to the capital market, as a conduit and one of the parameters for attracting FDIs, we need to immediately look for how we can strengthen our ecosystem and indeed ensure an enhanced interaction between the different regulators in the financial system. And this is because global investors typically do not only analyze a segment of the market in isolation of the others. For example, you look at how easy is it for you to get capital to flow into Nigeria and also out of Nigeria. Now, whilst it is great that we do not have capital controls or basically restrictions as it is, we need to ensure investors who have genuine CCIs, that's capital certificates of capital importation, are able to exit at will. They are able to exit, when there's a maturity or when there's a need for them to return their investment. We also look at the turnaround time. It takes the investors, as the market participants, to work on the turnaround time. You also look at how long does it take an investor to get settlement of bonds, for instance, into a CSCS depository account. You also look at what is this settlement cycle in the market. Also consider again what is the closure dates to register a secondary market trades in bonds, and how does this affect the liquidity of the instruments for an investor that may want to exit during that period. Some of the things we also look at and consider are what are the opportunities for non-investment grade entities to raise bonds. We talked about that earlier. The SMEs, what are the opportunities that they have? Even if sometimes, in the developing world, they regard this as junk bonds. There are also a number of issues that we need to deal with that would deepen our markets and, of course, ultimately attract the FDIs.
Thank you. Thank you. Last question for you, Jacques. Nigeria's GDP growth was 5% in Q2 2021. It's been attributed really as a result of the base effect. Obviously, when you're coming out of a depressed year, any slight improvement, creates a large number. Quarter on quarter is looking at 0.79%. In what ways do you think the debt market can help accelerate productivity in the system?
Yes, thank you, Ike. I think, first of all, I hope this growth will continue so that all Nigerians and all companies can enjoy an improvement in business and life. For me, I would say, of course, for us in finance, interest rates are key. So whatever they are, I'm not speaking about only the rate itself. There are a lot of additions to it, as you know. So to try to still make it more attractive. Of course, everybody wants to make good profits, but sometimes I really think it is almost exaggerated, let's say. Then one other thing would be to streamline the debt process. I think there are too many processes involved, too many stakeholders, and of course the regulatory environment is also part of it. Makes it very, very complex. Actually, you need a full team, full-time just on this. So try to make it easier. Then also try to relax the requirements for accessing funds. It was mentioned before, the access as well for smaller and medium-sized companies to the debt market. So to accept them with the risk it takes, but with proper guarantees maybe. Then I think the lobbying with the government, various ministries and regulatory organizations, this is key. You need a lot of documents, for example. Sometimes there are, of course, all of us, we should have the originals, but sometimes you need a new document. It takes a lot of time. The system is very archaic. And I hope digitalization, well, it's easy to say, but digitalization will help in this regard. And finally, we all have to improve the doing business. I mean, as where we stand today, Nigeria is actually is not encouraging. Everyone should work to make it much easier, and I think this will also accelerate the productivity.
Okay, thank you. Last question for you, Oladele. What should an investor look forward to in a typical ratings report in order to use that perhaps as a platform for making investment decisions?
Well, I think very simple. Where is the cash coming from? And what is the governance around the cash flow? And those two things are very key to make it very simple. Thank you.
Excellent. I think that's all I have for the panelists. I'd like to again congratulate you all. Thank you for your time and support of this initiative. I wonder if there are any questions from the floor. Wentz, do you want to moderate any Q&A that will be coming through before we let our panelists go?
No problem. Let's check and see whether there are questions. Otherwise, we would, let me see. We are looking at it right away.
Looking, I cannot see any questions at the moment.
Yes, I think we have one here. Yes. What can the regulators do to advance the ease of doing business? I think we should the moderator, you can assign the question.
Say that again. What can the regulator do to
to advance the ease of doing business.
I guess I saw Alaji Adamu's hand earlier on, and
I think that question has already been answered because the Commission has been observing ease of doing business. Because that is why whenever you submit your application, we call it filing in the first instance. It only become active application when you meet with all the requirements for any offer. And to do that, the Commission has threshold time within which, if all the documents have been submitted, then internally we have a mechanism through which we ensure that the ease of doing business is implemented in line with the presidential order on ease of doing business. So I believe there is what we call the mark-to-market policy of the Commission to ensure that offers are expedited in such a manner that no unnecessary delay is allowed. If there is any delay indeed, it could be attributed to maybe the issuer not submitting all the required documents that are supposed to be submitted to ensure that the offer is concluded within the threshold time. So I think we have embraced the ease of doing business, and we in the Commission, we have already a schematic way of saying that, look, even if we have some internal check-ins that we have to do, we give number of days, not more than 48 hours, within which if we ask each of the department, because whenever an offer comes, before it is concluded, we make sure that we have done some internal due diligence in terms of whether the issuer, have certain things that, in terms of uncleared effect with, some operation department. So those ones, we make sure that they are done within the shortest possible time. So I believe that the ease of doing business is a habit in the Commission, that we don't allow any offer to, to be left unnecessarily for too long. Thank you.
Thank you. Okay. Thank you very much,
okay.
Alaji.
Okay, there is one more question here. And the question is asking how to develop capacity locally in terms of training. But is there any, avenue to create probably a continuous training and retraining for the operators so that the knowledge gap can be breached?
What operators are you referring to? Rating agency operators or to investment banking operators? Because we have...
I think the entire stakeholders on the operator side.
Okay, can we...
That is the way the question came.
Oladele, can we ask you to take that on from the rating agency perspective, since this is part of your remit, yeah.
All right, sure. I can speak for our hand. Number one, and a platform like what we are having now is to serve that purpose. One, to sensitize the public, and number two, to also be able to bring some information that is kind of hidden to the fore, so that everyone can be educated one way or the other and get informed. And from the stable of DataPro, we have also made a promise today that this is going to be a continuous exercise. So I would just implore whoever asks that question to also keep it a date for us. We have said the date is not changing. It's going to be this Thursday of every October and every year. So like they say in the TV series, stay tuned. Thank you.
I have a question that's popped up. I have one more question here that's popped up on the Q&A window. I can see it. So please, can you run through the qualitative and quantitative criteria for companies looking to access the capital market? Funke, this is an issuing house question, so I'd like you to take a crack at it if you can. Yeah, thank you.
Thank you so much. Okay, so for an operator to access the capital market, it's something that there's a checklist basically that will be provided when the issuing house has, when an engagement takes place between the issuing house and the client. And typically that part of the checklist will include, like Oladile had mentioned earlier, will include the financials of the company, financial rating of the company, financial standing of the company, the also the company profile, and some other some other documents that will be required in order to assess the plans and the future forecasts that the client has in terms of business development and other initiatives that they will be requiring. And beyond that, again, the issuer will also look at the debt profile of the existing clients and what is the purpose of the debt, because the purpose of the debt is very important, and you also have to align that with the cash flows of the entity that is being discussed. Thank you.
Thank you. Thank you very much. I think that's all we have for this afternoon. Once again, ladies and gentlemen, my panelists, I want to thank you again. Funke Okoya from Nova Merchant Bank, Jacques Mekaski, CFO of Boa Group, and Mr. Oladele Adeoye, Chief Ratings Officer at DataPro. Thank you very much indeed for this wonderful panel. I will then hand it back over to Vince to continue with the deliberations on the seminar.
Thank you very much indeed. Thank you very, very much, Mr. Ike Chioke and your panelists for a wonderful job. You've really opened our eyes to a lot of things. And indeed, a discussion like this that is so important, definitely the time allotted will never be sufficient. However, we are glad that it's going to be an annual event, and we will note most of the things that have not been able to didn't take on board now. We'll bring them up again in future discussions. Some of the questions too, we are not able to take, we will be able to answer and bring them in the video deck, which will be, of course, will be uploading to our website. And then we encourage our various guests from across the world to, of course, access our website to get some of those responses. Once again, thank you so much. Right now, we are move on to the unveiling of the two offerings which DataPro is bringing in this inaugural and epoch-making event. And so we are going to do this very quickly, noting that time has been far spent, and I will handle it. We'll be looking at the rating report as well as the rating report is new look. What does it portend? What benefits is it bringing to the various stakeholders? We'll also be looking at the rating guide dashboard, which is electronic in nature. These two things are offering to the various stakeholders, the operators, the regulators, the issuers, the issues. Everyone is a beneficiary of these two offerings. And in this rating report, new look, several considerations have been put in place, part of which is to make it very, very readable and, of course, useful to the reading public, to the issuers, to the investors. We want to, of course, be able to offer this. Please let me just get the handle to scroll on this. Please, could you go to the next slide? Let's just get quickly to the new look rating report. Okay, so while that is coming up, I want to let us know that three basic, very important colors have been considered here. We've considered blue, we've considered green, as well as white. And these colors have very significant importance in the values that DataPro wants to deliver. And so it's going to really, okay, it's going to really help users to understand those value offerings. Again, we are also looking at the ease with which the users will be able to access, particularly when you look at the website. Today, this is the first of its kind that a rating guide is going to be, of course, included in so many of the offerings within the website. So DataPro has created a rating guide window that will help users to access the website and get both historic and current ratings. And in so doing, they will also be able to take decisions. And what is DataPro trying to do? DataPro wants to be able to bridge the information asymmetry, which is, of course, one of the critical issues within the capital market, particularly the debt capital segment. And so it is also going to help to be able to, of course, take advantage of the investment opportunities that are available within the debt capital market. And so DataPro has also integrated certain new technologies, including artificial intelligence, machine learning, and data analytics. And it is hoped that in a globalized world where, of course, the COVID pandemic has really brought about a lot of disruption, that some of these things that have been integrated, including graphics, styles, and formats, will make it very easy for every category of the stakeholder, be them issuer or investor, to be able to look at areas that will be of great benefit to them. And that is why the value proposition has a lot of value added areas, including enhancement of that report, the visibility and clarity it is bringing about to numerous users across the world, and even the enrichment of the executive summary, so that at the beginning you see, at a snapshot what the entire report is saying. Instead of going through the entire gamut of report, on one page you can see everything. It's also bringing greater details and extended classifications. It's also making it easy for navigation and reference, because certain links have been created so that from the website of DataPro, you can also access and navigate through very other relevant databases. For instance, FMDQ link, website is linked already. The SEC website is already linked, so that a user can come in and have a one-stop shop. There is also that need that the user is also looking for certain historical data. What are the types of issues and securities that have been rated in the past? Is it bond? Is it different kinds of fund or CPs, whether they are corporate or retail? You want to be able to assess, to determine, and also make some comparison and see whether the issuer is moving up or coming down. Of course, the rating lasts for 12 months. You want to see the one that happened last time and then where they are now. Then you want to be able to also make some comparisons between what is happening to the issuer and the other issuers in the market. So it brings about a comparative analysis. And it is hoped that in this current new normal, that supports like this will be able to help the stakeholders. And there is need, of course, for easy movement of capital, capital formation, capital mobilization, and utilization will even be made easier with things like this that will bring about the break that barrier of information asymmetry, and also support the interventions that the government has also brought, and then make it possible for the private sector and the public sector to be able to collaborate, to consult, to coordinate, and also to be able to consolidate on the gains that have already been made. And by so doing, there will be, of course, sufficient economic growth and development that can, of course, smoothen some of the damages that the pandemic has already brought to bear. So it is hoped that as the years go by, that there will be better and more offerings that DataPro will also be bringing to the table, and more discussions around value-added offerings will also be coming. So it is on this note, I want to bring these two offerings to and bring it to the table of the general public and the world in general, knowing very well that DataPro Limited has its footprint both locally and internationally. So once again, I want to thank everyone for, of course, taking time to look at this, and encourage all of us to please take advantage of this value offering which DataPro has brought to the table. Thank you very much. So with that, we will then move on to the closing session. And on this note, because time is fast spent, I would like to call on the Executive Director, DataPro, Mr. Oladele Adioye, to please give us the vote of thanks.
Thank you, Doctor. And I'd like to thank everyone on this call, distinguished ladies and gentlemen. We are very much delighted to have all of you participate in the maiden edition of DataPro Limited live webinar tagged Post-COVID Economic Recovery Credit Rating Imperatives for Issuers and Investors. The quality of contributions that we've had today will, in no small measure, galvanize and deepen the debt market going forward. It is in the light of this that we want to thank the DG and the representative of the Securities and Exchange Commission, SEC, for putting their weight behind this webinar and dignifying it by their presence. So I want to thank specifically Alhaji Adamu Sambo. It is also important that we acknowledge the contribution of FMDQ under the leadership of Mr. Bola Onodele Koko for contributing to our knowledge in this webinar as a keynote speaker. Though the CEO could not be here in person, but we appreciate immensely the quality of presentation from Ms. Tumi Shekoni. We also want to register our appreciation to the representatives of the following bodies: the Debt Management Office, Nigeria Exchange Regulation, Nova Merchant Bank, Lagos Commodities and Futures Exchange. This vote of thanks will be incomplete without acknowledging the personal contributions of our panelists and moderator. Therefore, I want to say that on behalf of all participants in this webinar, the knowledge you have shared with us today is unquantifiable. We appreciate the efforts, the knowledge, and your time. All of this would not have been possible without our worthy partner, the Association of Issuing Houses of Nigeria. In particular, the chairman, Mr. Chioke Ike, for moderating the discussions and his invaluable contribution behind the scene. We thank you, sir. So before I round off, I'd like to appreciate our team members who worked tirelessly behind the scene to ensure that we record this outstanding success. Therefore, I want to acknowledge contributions of DataPro team of analysts, our technical personnel, DataPro IT teams, and others whose contribution for lack of space could not be mentioned here. But let me single out Dr. Wens Nwoga for his contribution before and during this webinar. Doctor, you are much appreciated. And let me not forget the main man behind the scene for pushing, fine-tuning at every point of the planning stage to ensure that we have a successful outing. This is no other person but Mr. Abimbola Adesheyoju, the Managing Director and Chief Executive Officer of DataPro Limited. And finally, we appreciate the gentlemen of the press for the pre and post reportage of this webinar. We do hope you will all join us same time next year. We want to thank you all. Thank you for coming and wishing you God blessings.
Thank you very much, Mr. Oladele Adioye, for that wonderful vote of thanks. So it is at this juncture, I would then like to invite Mr. Buhari Aminu Isa, the Vice President of Compliance Institute of Nigeria, to say the closing prayer. Mr. Buhari, please.
Mr. Barry, kindly unmute yourself. We can't hear you, sir.
Can you hear me now?
Yes.
Okay.
Very clear.
I said my job is very easy because of how well the deliberations went. I'm being led by the Spirit to say this closing prayer. So let us pray. Bismillahirrahmanirrahim. Oh Allah, we are here today because you allow it, because of your mercy. So we pray for your guidance and success for all the objectives that we have reached and the goals we have set for ourselves in this meeting. May we achieve them successfully. We pray for your guidance and success in these areas, as only you can provide this guidance for us. Oh Lord, we also ask you, oh Lord, to pardon us. We also ask you, oh Lord, for well-being. We also ask you for success in this life and in the next. Oh Lord, we also ask you for pardon and well-being in our religious matters, in our business matters, in our family matters, in our wealth matters. We ask for pardon and well-being from you, as only you can give us that. Oh Lord, we also ask you, you are the only one we worship, and you are the only one we ask for help. So we ask you, we beseech you to cover up our weaknesses and set ease our dismay, oh Lord, and preserve us from the front, from behind, and on the right, and on the left, and on above us and beneath us. Oh Lord, we pray that all the achievements or intentions or strategies we have evolved, we have produced or arrived at today, let it be a success in the nearest future. So finally, we ask you for forgiveness, O Lord, and make us among the successful, both here in this world and hereafter. Subhanakallahumma wa bihamdik, ashhadu an la ilaha illa anta, astaghfiruka wa atubu ilayk. Alhamdulillah. Ameen. The meeting is closed.
Okay, thank you very much, Mr. Buhari Issa, for the closing prayer. Thank you so much. At this juncture, we want to thank everyone and for this live webinar, Post-COVID Economic Recovery, Credit Rating Imperatives for Issuers and Investors. Of course, we have been promised that it's going to be an annual event, so we are hoping and of course looking forward to a bumper, event next year. And we're also believing that you will also join us. And of course, we look forward to all the things that have been discussed, all the recommendations, and some of the challenges that have also been indicated, that these things will also be looked into by both the regulators and the operators. And we also want to thank those organizers, the organizers that have brought us together, DataPro Limited and the Association of Issuing Houses of Nigeria. So on this note, I want to thank everyone, all our wonderful guests from around the world, all the speakers, all the discussants, everyone that has contributed in one way or the other. I also want to assure all the guests that the questions that we have not been able to take today, we are going to take them and add them, or include them in the video deck that we are going to upload to our website, and encourage everyone to visit our website, of course, to access the video deck whenever it is ready in the shortest possible time. Once again, thank you and God bless everyone.
Thank you.
Thank you.